Joining us now, Hippo co-founder and CEO Assaf Wand. Bloomberg's Danny Berger is also with us as well. Assaf, tell me why IPO right now in this market?
It's a good question. I think it has nothing to do with this market. For us as a company, the first question was, are we ready to be a public company? And there's a lot of things that you need to make sure that you're actually ready to be a public company. Once we passed that threshold, the question was, is it right for Hippo to be a public company? And we thought that we're in the world of insurance. In the world of insurance, trust is a big component. And we thought that being a public company brings us more corporate governance, higher level of trust. Customers want to know that we're going to be there for the next 10 years. And we thought it's the right thing for Hippo to be a public company. We actually started a process where we had enough money in the bank. We had a big round in October of last year. We had hundreds of millions of dollars in the bank. So it wasn't just about the capital. It was mostly about prepping the company for the next growth phase in the public domain.
Assaf, Danny here in London. Great to talk to you again. So going public is one thing, of course, but why do it via SPAC? Why not take the traditional IPO route or direct list?
We looked at all of these options, and I think every CEO has fiduciary duty to actually present all of the options to the board. There is direct listing, there is SPAC, there is traditional IPO, and we've done a triple track and looked at all of the options. And then what transpired is wasn't a SPAC versus a non-SPAC. It's the ability to work with some of the world's leading entrepreneurs, people like Reid and Mark and Michael, and for me personally, as a CEO, to not take advantage of this opportunity to work with the best entrepreneurs in the world that build these iconic brands and have them as a partner to transition to the public market is just it's just something I couldn't resist doing it with them.
So Mark and Reid, you're referring to there, of course, the LinkedIn co-founder and Zynga founder launching the SPAC that you've decided to go public through. But, you know, a criticism that we do often hear is, okay, they're short-sighted. People who are launching the SPACs are in it for the short term. The incentives aren't there. So what does your structure look like? Are the Reid and Mark, are they staying in for the long term with your company?
That was one of the most important things and points of alignment. So in our transaction, the alignment was a big component. So the management is locked for 2 years, but also the sponsor is locked for 2 years. They have an earnout of their shares, which is moving from a price to 10 up to 20. So they're making all of their promote only when the stock doubles. And this is a long-term partnership. They're taking a position on the board, and specifically, they're actually helping us diversify the board and find some of the most diverse and strong candidates for our board. We work together on a regular basis. It's not a transaction. If anything, going public via a standard IPO is a lot more transactional. 5 seconds after you're public, you don't know who are your investors. You can control it. There's no lockups for specific investors. This aligns the interest of the company a lot more on the long term than any other transaction that we've seen.
Right. Also, I'm wondering, you know, you talk about going SPAC because of the people, not necessarily for the structure, but we have seen on a day like today when yields spike past 1.6% that a lot of times SPACs sell off because it's this concern over froth in the market. Are you concerned that you might get lumped in with these other SPACs on days like today when there's market turmoil?
It's a valid point, and it's something that is on our mind, but we believe that it's a lot more important on what the asset that is coming in rather than what the vehicle that brings you into the market. And our company is ready to be a public company. We are very certain on the projections that we give. We also can give them as a SPAC, in a SPAC process as opposed to an IPO. We felt it's the right thing. We thought that our story is not that trivial. It's not a simple direct-to-consumer kind of company. There's risk, there's insurance, there's a lot more complexity. And we wanted to have that dialogue with our partners and with our investors. And will we be lumped in every once in a while? Yes. But we think at the end of the day, in a certain month, it's going to be about the merit of the company versus not the company. It's not going to be who came in via SPAC and who came in not via SPAC. It's about, is the company performing? Is the company delivering? Is the company doing well? Are we basically adhering to everything that we said in the roadshow?
So let's get to that. Your home insurance, you want to be like a tech home insurance situation. How do you grow? What are your plans? And how do you get there? Is it M&A?
M&A is an option, but it's far from being the main thing. Home insurance is a $105 billion market in the US, and it's actually growing at 5 to 6% a year, and it's going to keep on growing for the foreseeable future. There's going to be more homes in the US next year than this year, so it's less of an issue on growth. There is only one player that has more than 10%. I think it's State Farm, and then it trickles down significantly. You can build a really, really big company by being 1, 2, 3% of the market. So it's less of an issue. We see that there is a crazy tailwind, customers that are looking for a different experience, a growth in home buying, refis, and things of that. So we're only covering 72, 73% of the US. We're going to cover close to 90% by the end of the year. We have tons of partnerships that are coming in. We're just beginning.
Assaf, not too much time here, but I'm curious, you deck out your homes with a lot of smart home sort of equipment. Is cybersecurity a concern among your customers?
Cybersecurity is a concern for every individual and every company. And it's something that every individual should take very, very seriously. It's something that we monitor closely, both as a company and for our customers. There's nothing over risky by having another IoT device, just like it's not too risky having a TV in your home. We're only choosing the best partners we can find. We're aligning, we're testing, we're checking all of that. It's something that is an issue that's going to be an issue for the next, 100 years, if not more. But it's something that we take very seriously, and we're monitoring, and it shouldn't be more risky for our customers than any other customers.